Hey guys, getting a little cautious with the market here. I'd like to see 2 hourly closes above the 279.40 area on SPY. It just seems like some of the main stocks that we follow, the canaries in the coal mine, like Caterpillar, they just can't get out of their own way. They can't get back above the 20. Here's your trend line break here. Can't even get back above that. I know these are just simple charts here, but let's look at the 1 years. I mean, we're rolling through the fib numbers. At least we're holding the 50% retracement from the pivot break, the first bounce where we've started to break down. There's a couple numbers you can draw, but I'm working this area here. We failed on this bounce trend line. I use different fibs on different stocks. This one seems to be accurate for Caterpillar. Couldn't go down and retouch the bottom, so we fired it up. We're just kind of moving through the numbers there. I don't know, the market looks like SPY is being artificially held up by rotation into the stocks that also make up some of the QQQ, and it's Microsoft, it's Amazon, and it's Netflix. The advanced decline line on a broader index does not look good. So I'm getting a little cautious here. I'm in SPXS still. I don't know which way this thing's going to turn. I'm long Netflix still, looking for our target 466. But it's weird being short and long in different areas, but this is what's working. iBuy is the ETF, online retail ETF. That's going good. IBUY. And here's your brick and mortar retail. Looks horrible. Let's do a comparison and see. Let's go custom symbol. Look at the big difference between these retails. They started the same pattern, right? On the sell-off. And then what's going on? Online, brick and mortar. Pretty similar. We got a deeper trough on Netflix. Online seemed to hold pretty good across the board. They kind of met here. Now we have a similar pattern, obviously. Now Netflix is outperforming. I don't know, the market doesn't look too healthy here from a broader perspective. It just seems like a narrow group of stocks holding up the S&P 500. Let's look at American Express. A tale of two cities. Online retail, American Express. Can't even get back above its 20. It's a little concerning here for the broader averages. IWM, the real deal. Going the opposite way, making lower lows. Probably going to tag the lower channel there. This is kind of how I expected the SPY to go. S&P 500. Let's get rid of this. It's almost like the S&P 500 wants to pull back along the trend line here. At least revisit the breakout point at 265, 264 and change for a healthy move. And if it weren't for these companies like Microsoft and Amazon, they would already be revisiting these lows. So, like I said, a little caution here for sure. This is why I'm kind of short by going long SPXS. Need some consecutive closes above that line. You got one, but then you get big rejection. I don't know. We got some problems here for sure. A lot of money's rotating. What happens when that rotational money comes out? Because those stocks like Amazon and Netflix have already run. you're going to see the whole market come down.